All right, everybody. So let's talk about momentum trading. What causes momentum in a stock? Well, really, it's just high level volume trading, but there's usually some sort of initiation or a spark, right, to light up the stock or to dump the stock. It could be news driven, maybe a company's getting acquired or they just scored a big deal with Amazon or Google, and momentum is going to swing in the stock after the news. Now, the initial move is based on the news. The momentum is the follow through after the news, because there's a lot of times that we hear news hit the wire about a stock pops, and then all of a sudden it drops and it's back to where it started. And it's basically you're either getting in way too late and you're getting in near those highs, and then all of a sudden it rolls back, or you just completely miss out on the move. You see it and you're just like, what? I have no interest. Specifically, there's certain events that could create momentum, but realistically, the momentum is the desirable demand by retail institutions after news or after fundamental, maybe a fundamental report or whatever the case may be, to drive that stock in that direction, maintaining and coming through. So how do we kind of suspect where momentum is going to be? Well, let's go back to the ABCs of uptrends and downtrends, right? Uptrends, higher highs, higher lows. That's a major component that gives confidence to buyers to either hold strong or to look to buy in. And with downtrends, you're getting lower highs, lower lows. You're getting confidence from the sellers and no interest from the buyers to jump in. And so in this aspect, a lot of the times momentum is driven because the stock is making a higher high the following day and possibly the day after. People continue to pile in saying, hey, this move is not done, I need to get in still. So this is going to be important because there's going to be thousands of moments where you think momentum is going to creep in throughout the calendar year, and a lot of the times, a majority of the times, these stocks will roll over. So let's talk about that higher high theory. Here on the chart is an example of LMT, which is exploding right now because of the conflict in Russia and Ukraine. Now, it sounds crazy to try and profit from conflict. You can't look at it like that. This is what was a pure momentum opportunity. Everybody's like, man, defensive names are going to go up. I got to jump in. And so they jumped in, and maybe a lot of people missed the boat, right? They're like, oh, I didn't even think about that. And the following day, what was really important was that LMT made a higher high. And once it did that, all of a sudden it exploded. Basically, from the open to the close, it just kept going higher. And then it did it the following day. So that's where the idea of momentum came into play. It wasn't the initial breakout. The breakout is what a breakout is. The momentum is when the stock follows through. The breakout in this instance with LMT brought the stock to around $415. But the momentum carried that stock from $415 to $460 in 2 days. And yeah, maybe you missed the boat on that breakout right around that $400 price level, which I'll highlight right here on the chart. It actually broke out through a pretty nice ceiling. There was a basic double top, from a technical standpoint. That's where two highs collide at the same price and the stock cannot progress. But once it did break through that level, it started to explode. And again, the following day, the high, which I'm going to highlight right here, was breached and got above. And the following day, the high was breached and it got above. And you could see it was a straight vertical ascension. And even now, the stock is continuing that upside momentum. It wouldn't surprise me with it currently trading right around 461 here, making new all-time highs, that we could actually see this break live while we're talking. But the initial idea here is that we've always been taught not to chase after stocks, not to go after the opportunities. And that's very true. Like I had said before, a lot of these opportunities you think would have momentum end up falling flat. So people tend to shy away. That's the thing here, folks. It's just the fact that you just didn't know what to look for. This is what this video is about, to outline what to look for. So in my opinion, rule number one, if you miss the boat on the breakout, we're looking for the next day to break those highs. Okay, so in the instance where LMT broke out on February 25th, it hit the high of $414.45. At that point, the following day, it opened at $413.81. So it opened below the highs. And once it broke that 414, 415 level, the stock skyrocketed. It went to $433 by the end of the day. It actually closed at $433.80. The high of the day was $433.90, 10 cents off its highs. And sure enough, the following day, it opened above and just took off, ran all the way up to 458.53. So now, if you were paying attention and we saw that breach of 415, you're like, okay, I got to get in. The idea and the attitude here, okay, is to not expect home run plays, but know the potential. The attitude here is that you kind of want to get in and out. You want to capture the momentum, but you also don't want to get caught holding at those levels if the stock pulls back. So this is always that kind of fine line. So where's the confidence comes in? Well, let's circle back. We talked about the highs being breached on the daily. Well, intraday, what we're looking for is the stock to constantly make new highs during the day as well. When you play momentum names, it's not one where you want to buy and then look at it a month later. That's the absolute opposite of what you want to do. And I understand everybody may have a 9 to 5 and may be difficult to check, but hey, if you care about your money, you'll find a way. I'm not saying totally forgo your job, but let's be real, guys. This is your money. Make sure you are paying attention to it. By the way, momentum in LMT, creating new highs. So this is what we kind of want to see. We want to see that continuous ascension. This is just an example from today. We've had these highs and the constant knockback, but you can see once we finally started getting going, it was a strong vertical ascension. Same thing here. When we broke the highs, it's a strong vertical ascension. In my opinion, the momentum in LMT is just starting to pick up once again. Not only did we breach the intraday highs, but we're also breaking the 52-week and possibly all-time highs in the stock. And that's such an important factor. When we see stocks make new highs, a lot of times it'll make new highs and immediately retrace from profit takers and the buyers that are holding that stock looking to take profits. But when we see the break of these highs and buyers coming in to buy the stock, that's important. That's the driving force. Any up move in the stock is a derivative off of near-term demand, on demand, right? I want it now. That's a major driving force. The continuous push is also fueled by short sellers saying, this stock is up 20% over the last week. It's due for a pullback. Let me short. Well, it's not working out. I need to get the heck on out now. So when those shorts are exiting, whether manually or automated, and I'll talk about that automation in a second, it's only fueling the upside. Now, manual stops, meaning they're exiting either with a buy limit order, but if they need to get out immediately, it'll execute as a buy market order. But it's the same thing with short sellers that are using stops. To exit your short sell signal or your position, and you have a market on stop order, it's going to execute like a buy market order. So if we talk about on-demand buyers that need to get in now, they're not really trying to limit in. They're just like, you know what? I need to buy it. I'm going to buy market. And then we have sellers like, I need to get the heck on out. Well, buy market. And then there's sellers that are manually like, I don't know what to do. I need to get out. Boom, buy market. Now, all of a sudden, we just have a one-sided market, right? Everybody's buy marketing everything, immediate extension to the upside. That tells me there's not only great momentum, but it keeps getting fueled by the trading activity in the stock. And that's how momentum sustains. From the buyer demand and shorts actually having to get pushed out of their trade. Now again, if we look at LMT, new highs, momentum is continuing here as we speak. And this is a beautiful factor because if we look at this now, if we actually look at the news, right, the conflict news, and we look at a major company that could benefit greatly from this conflict news, right? This isn't about trading the conflict. You're not picking a side of Russia and Ukraine. You're looking at a buy-side opportunity and a name that is benefiting from news. Regardless of the news itself, this is a fundamental positive for LMT, but for short-term traders, this is a great momentum name. And that's the configuration that we want. That's the recipe that we want. For one, the news isn't slowing down and it's continuing, so it's going to draw a lot more other people's attention in. Number two, because of the price performance, news is going to talk about it more. It's going to give you, it's going to give the retail public a little bit more knowledge about what's happening. And then again, we always have those FOMO traders that are always late to the party, now starting to pile in. And then three, you have people like myself and my colleagues who are, what you would deem professional traders that are looking for these opportunities and jumping it. We don't even care about the news. It's about the opportunity itself, which really what trading comes down to. But there's other back-end things of trading that people need to understand. Just because a stock is up 5% one day doesn't mean it's automatically going to be up another 5% the next day. Remember, the stock goes up and down, up and down. A lot of this is attributed to the market environment. But when a stock is completely oblivious to the market environment, it's trading in its own world, that is when you know it is true momentum trading. Regardless of what the markets are doing, regardless of what other peers are doing, it's all about not only price performance, but sustainable price performance. And when you folks see sustainable price performance, obviously all good things do come to an end. Eventually, LMT and other defensive names that have only gone up here over the last week and a half will pull back. But uptrends, right? Higher highs, pull back, make a higher high. It's a beautiful asset as well. The initial momentum is going to be driven based on environment, based on market demand. Make sure we understand what market demand is. And if you don't, go back a couple of minutes, just listen to what I say, and you could get a better understanding of how the dynamics, the market auction process, the buyer and seller bidding and offering will really break down. I try to keep it as simple as possible. Now, if we continue to see this momentum, the expectations are we are going to see higher highs. Once we start seeing a name like LMT get near those highs and start really stalling, really struggling, if how this chart currently looks over the last few days doesn't look the same, especially when it gets to this level, that's when we know that the momentum can start ending. Another factor, folks, is if we start making lower lows the following day. We may not know it right away at the highs. I've taught reversal patterns. You can look on our YouTube page, look for the M reversal, the W reversal, and think about those ideas. But the truth of the matter is, this is going to keep going until it doesn't. And it sounds stupid to hear, but there's no time frame that's associated with momentum. Momentum could carry for months. If this conflict continues and there's more involvement from other countries and then the United States gets involved, is that going to be bearish for LMT? That may be bearish for the markets, but fundamentally for a defensive company, especially one with government contracts like Lockheed Martin, LMT here, that's actually going to be fuel added to the rocket ship to help it propel higher. So this is where we get to a point where we have to be very attentive of price performance. Is the stock continuing to make highs? Did the stock make a lower low? That critical sign of making a lower low could give you enough reason to take risk off. Does it mean immediately take a risk off? Depends on where you get in and what the aforementioned opportunity was presented. Certainly. Because when you take on a trade, folks, you should always define your risk. But in the same sense, even if you do exit, it doesn't mean you have to give up. In fact, I would encourage you folks to make sure you keep an eye on that name. Don't make it your, core of the universe here. You could absolutely take your time and look at other opportunities. Just don't forget about it. Because as you can see, LMT had this huge driving rally, had it pull back, made a lower low. It ended up going and making a higher low than a higher high, and then today it is breaking out, and it might start all over again. The continuance of momentum is going to be a derivative on demand. That demand is going to be based on market participants from the retail side and institutional side. And if they continue to buy, then why shouldn't you? That's an important factor to keep in mind. If the market is still fueling that momentum, there's a trade to be had. Now, is it risky? Very risky. That's why it is important to make sure you follow these profiles look for this opportunity, and then you have to make that decision to pull that trigger. A lot of things to think about at that one moment, but that's why you train for that moment. That's why you would be prepared, because you plan for that moment. Now, I also will suggest, folks, with the market demand, that means we should see an uptick in volume. If we're not trading greater than normal volume right now, it is absolutely not worth considering, because it could be a total head fake. Let's take a look on the daily chart on what the average volume in LMT has been in comparison to recent trading sessions. So the breakout bar, folks, on average, over the last 50 days, LMT had traded 2.2 million shares. That breakout bar day, they traded 4.1 million. The momentum day, again, 2.2 million average. Now, that day, they traded 3.3 above average. The following day, the average jumped up to 2.4 over the last 50 trading days. Again, we traded 5.8 million shares. And then when it really topped off, folks, 2.5 million was average. We traded at 5.7 million. You saw that we started seeing the higher than normal average volume, the larger than normal trading ranges, okay? And I'll talk about those two things in a second. That's going to be important. With that break on higher volume means there's more money, more participants, and more interest. That's how momentum is actually initiated, by demand. Now, we could kind of see it coming here. I use an indicator called the ATR. I'm sure a lot of people are familiar with it, but if you're not, ATR stands for average true range. So what that basically does is it tells you what the stock normally trades from the highest point of the day to the lowest point of the day on average. I use a 30-day average on this day where we basically started breaking those highs on the 24th. The total trading range came in at $11.56. Their 30-day average at that time was presented right here. That's that ATR. And if I highlight that day, you see that number change to 8.2. So an 8-day, $8 range, meaning from the high to low, it trade within an $8 range. That day we traded 11. The following day we traded in a 19.23 cent range, so $19.23 range. Again, ATR is at 8.6. The following day at 20-point range, again, that ATR is at 9.19. And then the following day after that, 23.5 points. And again, this is while LMT was averaging around $8 to $9. So somewhere around almost 2.5 to 3x their normal trading range on twice the volume. Do you see how that all coincides? If we see a huge drop off in volume, if we see a tightening of trading ranges, that'll tell you that the momentum has subsided. Making new lows tells me that there's a lot of profit taking and we actually may see a reversal. But if we continue to break these highs, if they continue to push, if volume continues to maintain above average, there is an opportunity for momentum. And folks, if that's what you're looking for, remember, momentum opportunities are risky, but they can be extremely rewarding if you get in early enough. If you now see it on day 3 of the momentum chase, just know you're going to be very late. The risk is exceptionally high for you to lose money, where your reward potential is extremely limited. So I don't know if that sounds good to you. Lower reward, higher risk. But that's really the situation you're facing if you're trying to chase after momentum on the 3rd or 4th or 5th day. You could just wait, look for a reason. The breaks of those highs could be another one. However, if you spot this early enough, folks, even though this could be a risky proposition, even though you're buying in at what would be considered the top or the potential top, if you actually look at the parameters and see all the things that's outlined, this actually is a high probability position. The markets will do the deeds for you. All it takes is for you to be involved. But make sure we're looking at stocks that are trading greater than their normal ranges, trading on exceptionally high volume, much greater than normal averages. What helps is technical breakouts as well. That could be a thing. Make sure there's some sort of news or a specific reason to put risk on. In this instance, with the conflict that's going on, it seems like this was a great opportunity to buy because there's going to be value for, or it's speculative value and growth for a name like LMT, right? Because, you know, for a company that thrives on war and having a war, this is generally money-making season for them, right? And with that, make sure there's continuance, breaks of highs, intraday and daily. And once we start seeing that momentum wane, take your money and run. Don't be worried about what you could have had, right? Don't look back like that, guys. Because there's always going to be that time where you could have taken your profits, you had plenty of opportunities and you didn't, and all of a sudden the stock collapses on your face and you're left with a ugly proposition. Either holding strong at the highs and a stupendous pullback, or you exit at a pretty substantial loss. And that's always the worst thing psychologically, having a winner turning into a huge loser. Hope this helps, folks. If you like what you had heard, if you like what we had covered here, don't forget, click on that like button, click on that subscribe button, leave in the comments below what you want me to cover next. Just want to say peace and love.